Welcome to Fitz Factor, the show where you learn how to master the stock market with Dan Fitzpatrick, the stock market mentor. Dan is a savvy trader. He's featured regularly on Fox Business, CNBC, Investors Business Daily, and SiriusXM Radio. In this podcast, Dan shares his insights on trading, life, and attaining long-term success in the market.
Scott and I were having deep thoughts here about things.
Talking about emotional intelligence in trading. And even though, as Dan, you'll say we're behind this side of the microphone, developing that emotional intelligence, understanding yourself emotionally, I think even at this level that you and I are at, sir, I think that it's still so paramount to recognize your own emotions in your trading and, recognizing, wow, I've made a good amount of money in a short amount of time. This is an outsized gain that I'm used to. I better take profits because I've seen in the past how I've reacted to that. And, kind of really making that shift in your own trading. And that's, I find, how you really grow as a trader, doing the stuff that's uncomfortable. I remember looking at my accounts when I would get started and be like, wow, I just made so much money today. I can't believe it. I wonder what tomorrow will bring. And then tomorrow, you see your account is much smaller because it's pulling back.
Because you made so much money yesterday.
yeah, exactly. And so everyone else is taking profits. And you're like, oh, I should have taken some profits yesterday. And now I'm not. And so recognizing, wow, things are getting crazy here, and you see that happen in your own trading, that's probably a signal to take some off the table.
Yeah, a couple things on that. First, the first thing that comes to mind is it's a really, really important to be mindful of how you are doing, like how your trades are working out. Even if you don't specifically track your trades, that's okay. I will tell you, you'll do better if you do, because then you'll know exactly how you're doing, and then you know what to improve upon. But even if you don't do that, it's okay. It can be time consuming, though I'm going to help you out with that sometime in the future. But if you're tracking your performance, you will actually know when the market is turning before the market really turns, because your trades are not going to be working out as well. And you'll see it. You'll see it in like with what Scott was talking about, where it's all good in the hood when things are going up. But then when the market rolls over, you realize like, oh crap, I took this big loss or that big loss or whatever. So if you can instead and again, if you don't want to, it doesn't take a lot of work. But if you're spending money in what you're doing, you have to be a good steward of that money. That's the way I look at it, is like the Lord gave me this blessing of having money to put in a trading account so that I can engage in work so that I can grow that. Hell, that's right out of the Bible. You put your damn money to work so that you can grow it. So respect that. And that means that it takes more than just clicking the mouse and buy because Dan said so or Scott said so. There are many mistakes to be made by Dan and Scott and any of the greatest traders in the world. And so you need more than that in order to be a good steward of your money. And one of the things that you can do, it's like, hey, I'm an entrepreneur. 2 reasons for that. I'm a driven person. I've always, in every job that I've had, well, with the exception of a couple, I've always felt like I was smarter than my boss or than the president of the company or the owner. And so sometimes I would quit because I would find something better. And maybe it was a good working relationship, but I still had a lot of confidence in my own intelligence. And then there were other times when I got fired a lot. I'm a really crappy employee. I got fired a lot. And you know why? Because my feeling that I was smarter than the guy that was signing my paycheck was actually kind of getting in the way of my attitude or how I was performing or whatever. And so then as I'm walking out the door every single time, I'm thinking, maybe I'm not smarter than that guy because he's still got money coming in and he's got the big office and I got a freaking cardboard box. So the point is, we get humbled at all stages of life, and reality comes to humble you at very, very inopportune times, which is kind of what humility is all about. But one thing that I've learned now is I started my own business, and I've been doing this for 20 years, is I meet with my bookkeeper every month, and we meet for about 3 hours. And I meet with my CPA once a quarter. We spend a lot of time doing it. Why is that? Because I'm Ebenezer Scrooge and I want to count my money? No. Sometimes I see the money going out the door. That's the nature of running a business. And by the way, you're in a business too. If you're trading stocks, baby, that's your business. But the reason I meet is because I am a good steward of my capital. I want to know where my money is going on the outlays, and I want to know where it's coming in on the income. What I do is absolutely no different than what you do. You just don't have to meet with anybody as often as I do. So if you truly want to be a good steward of your capital, guys, you got to know what the hell you're doing. And I'm not talking about like, oh, well, I need to learn more. No, I mean, yeah, you do. But you have to learn what the impact is of your trades. And if you're losing money, okay, that's all right. It's really okay. As most of you know, I've suffered massive losses in years gone by. I mean, crap that put me in the parking lot going to Home Depot with an application. And then at the last minute, I'm going, wait a minute, like nothing against the guys in the orange aprons, but that is not me. So I've taken those big hits. And as I would look back on it, I realize that the reason I took those big hits was not because I wasn't trying. It was because I didn't know what the hell I was doing while I was trying really, really hard. And then obviously, because there can be no other reason for this, obviously, I took some big losses. So if I had instead known back then what I do now, which is, hey, man, I got to track my trades. I got to know, like, how much am I making on my profits? How much am I losing on my losses? What's my batting average? Just stuff like that and a few other things that are even more important, but I didn't plan on getting into this now. But if you know that kind of stuff, then when your performance starts changing, you'll see it, because it's measurable. And I'll say it again, this doesn't have to be a huge homework assignment for you. You just need to be paying attention. And you also, I was talking with Scott about this a little bit beforehand, be a rules-based trader, but don't go overboard in that. And what I mean is, when a stock's going up and we're long, that's a good thing, baby. Loving that.
If you're getting value from this podcast, click the subscribe button and sign up for Dan's free daily videos at stockmarketmentor.com.
But you don't know how far that stock's going to go. You want to pack it on as much as you can. Like, how many times have you thought, crap, I sold too soon? It happens a lot. But with that said, you need to have some kind of discipline, not a specific rule, but you need to have some kind of discipline in either taking profits along the way or at least raising your stop on partial positions so that you're always managing your risk of what? Of giving away money that you have. And even though your money is in a stock, you have an open position, some people will say, well, that's not your money. That's the market's money. No, that's your money. You can take it anytime you want, baby. That's your money. So if you're watching a position work, that is your money. You need to be a good steward of that money. And that means that you're managing your risk of give back on the upside. And that does not lend itself to specific rules. Sometimes, if you do have specific rules, sometimes they'll work out great, but sometimes your rules are going to work against you, and they will keep you from making as much money as you would have if you had just let her rip. No, if you'd just been thinking a little bit. Again, you're kind of taking profits. You know that one of the rules is you don't just hold everything and try to pick the top. One of the rules is, as the stock moves higher, I want to take a little bit off the table, not everything. Otherwise, you're out of the position. Take a little bit off the table, and then that will lower my cost basis in the remaining shares. And it's the same thing with options. It'll lower my cost basis in the remaining shares while allowing me to still move higher, to still make more money. So I'm not going to go into more detail on that, but there's a lot more detail that I could be going into. But here's the flip side. You have to be rule-based if you're at a loss. Like, one way to do it, this is a rule. Could be a rule, could be your rule. And it all relies on good entries, by the way. Any rules that you have on taking losses, they have to have the prerequisite that you know why you entered when you did and what your, oh crap, I'm wrong level is. But one way to manage a position, again, it's just one way, is to say, okay, I'm splitting my position into thirds. On the losing side, if it drops 3%, then I'm going to sell a third. Okay, if it drops 5%, and this is all based on when you entered, if it drops 3%, I'm going to sell a third. Okay, if it drops 5% from where I bought, then I'm going to sell a third. And then if it drops 8% from where I bought, which would have been William O'Neill's deal, then I'll sell the last third. Okay, so you've split your losses into thirds. So what's the maximum loss you're taking on that type of a rule? 5%. A third at 3, a third at 5, a third at 8. Actually, that's not quite true. If it was 7, it would be. But the point is, you're averaging your losses, and the worst case scenario is still okay. It's still okay for you. And that's, in my mind, the losing. If you're a good loser, you suck at competitive sports. But if you're a good loser, you can excel at trading because you're willing to take the loss as a part of doing business, in the same way as I'm willing to take a big expense as a part of doing business. Sometimes you go, okay, well, this project didn't work out. I thought it would, but it didn't. It cost me money, but I'm still here, baby. I'm still in the game, a little bit wiser. I know what not to do. Trading is like that, guys. It really, and why am I relating it to my business experience, both good and bad? Because that's trading. That it's like you're an entrepreneur. You are an absolute entrepreneur doing what you're doing. If you're saying like, well, no, I have a full-time job. I work for whatever the case may be. That's fine, but you got a side gig here too, because you're the one that's responsible for your well-being in this business. So anyway, as Forrest Gump says, that's all I have to say about that. Thanks for the convo, Scott. You and I had a good one beforehand, and we carried it right into the session as far as losses and things like that. So anyway, trade well, and I'll see you guys next time.
Thanks for listening to Fitz Factor with Dan Fitzpatrick. If you like this, then you'll love Dan's premium service at stockmarketmentor.com. where you can learn how to trade stocks, options, and cryptocurrencies. Click the link below and get access to real-time trading alerts, a community of traders just like you, and live training sessions each week. Get the trading edge that you need at stockmarketmentor.com.